Since the financial meltdown of 2008, it's clear that the actions of many Wall Street banks contributed to the economic crisis our nation is currently facing. First Bank and Trust Company, along with other small community banks, are the backbone of our financial system, and unlike their Wall Street counterparts, they did not contribute to the financial crisis. They are, however, playing a crucial role in our nation's economic recovery.
Well, there's a big difference between community banks and investment houses. Wall Street, you have a lot of investment firms, Lehman Brothers, Bear Stearns, Merrill Lynch. Their purpose is primarily to make investments, to put together investment strategies and products for sales and commission. A community bank such as First Bank and Trust, we center our attention trying to work with the local economy, the industries, the producers. Our purpose is for credit and for credit extension.
We see ourselves more as relationship bankers versus what I remember from my big bank days as being more transaction bankers.
Well, First Bank and Trust got organized in 1970, right before the 1980 recession. We started out with one bank, 5 employees. We now have 21 banks scattered across Virginia and Eastern Tennessee with 300 employees. Over the past 32 years, we've grown the bank from $1 million in assets to $1.25 billion in assets today.
Bill Holtzman, owner of Holtzman Oil, knows firsthand the value of banking with a smaller community bank that understands his individual needs.
We enjoy dealing with people in the small banks because they know us. I had $5,000 and I borrowed $37,000, and that's how I got started. So I borrowed it from a small bank, and I've always liked dealing with the smaller banks because we have always felt we should deal with people who deal with us.
Small businesses employ 95% of America's workforce, and community banks supply the major source of credit to those small businesses.
The financial crisis had a tremendous impact on the agriculture and small business community. When the financial crisis occurred, many of the large institutions basically locked up, and there was a number of small business owners that saw their lines of credit diminished by 75%.
When the Dodd-Frank legislation was passed, what policymakers did not realize is that the 2,000 pages, when clarified, will mean nearly 7,000 pages of new regulations on all banks across the board. This excessive regulation, though well-intended, can burden the ability of community banks to supply credit to small businesses when they need it most.
Of over 250 regulations, only about 75 have actually been dealt with this time. There's another 145, 150 regulations that we're going to have to deal with in the future. So a credit that we do today may be criticized tomorrow, that we may have to write it down. That has an effect upon the bank's capital. When it lowers the bank's capital, it impedes the bank's ability to extend more credit out into the community, and just creates a roller coaster type effect.
Some community banks have less than 50 employees. And when you take a bank with 50 employees, that you may have to have 4 or 5 compliance people on staff, that's a pretty significant cost.
Even with the added costs of compliance, community banks are rising to the challenge. In fact, First Bank and Trust Company has effectively placed approximately 90% of local deposits back into the local economy in the form of loans, which help support the local employment efforts.
They not only provide financial loans and financial services, but we hold educational seminars for our small business people, for our agriculture customers, because we want to make them better. And if they're better, we're going to be better. And so that investment that we're making back into the communities, the investment we make back into youth groups and our future aspiring small business people, and being able to provide internships for some of our students attending university. These are all critical for the engine of growth of the United States of America.
There are 2 kinds of people in banks you deal with. You deal with message carriers and advocates. If you're dealing with an advocate, you will do a lot of business with that person. And in order for that person to be an advocate, he really has to know your business. And if you're dealing with a bank that has an advocate who's working with you, he knows what your situation is, and so he can make a commitment to you very quickly.
They provide what I would call not cookie cutter financing. In other words, you're more than a credit score. You are a human being. And oftentimes they'll provide financial packages that are customized to that small business or to that agricultural business out there.
Big banks send people out to visit with us and see us, but they really don't know much about us. They can look at our financial statements and they can do that, but they are really not in the community and they don't know what our integrity and all the things we do. And I think in business, integrity is the biggest thing, and I think that's why our business has grown.
We try to be conservative during the good times so we can be courageous during the tough times so that we can be consistent all the time. And I think that's very, very important in this type of environment, because one of the things is you don't want a bank that's going to be there during the good times and then all of a sudden disappear when times are tough. And I think that is so, so critical. And if you think about it, this bank, First Bank and Trust, we have board members who are actually small business owners, who are agricultural producers. We have owners, we have management team, we have loan officers who are part-time business people out there. They smell, feel, touch this business community out there, and it's very, very important to them.
We have been doing business with First Bank and Trust for approximately 10 years. I would say they have been one of the best banks that we have dealt with. I know the people who run the bank, and that's that personal touch that you don't get with the big banks.
Hello, Sue.
We did not have the community banks of the United States of America. Small business, rural communities, and agriculture would be in dire straits.
Hey John, this is Bill. Yeah, I need to talk to you a second about your credit. There's no worse feeling than foreclose on a piece of property or a person's home and then have to sit down in church with them the next Sunday. You don't want to be in that situation. So you want to make sure that when you extend that credit, that customer has every opportunity to repay it. And then when they have difficulty, you want to hang in there with them. I look forward to working with you on this.